let's keep it real. We were broke.
Yeah.
And on
Yeah.
paper, it looked as if we had it all together.
It sure did.
You know,
you
we
had
have-
a master's degree. I got an engineering degree. You know, we're making clothes. I'm making six figures. You're close to six figures, and everyone's telling us to buy this home. And it's like, yeah, y'all all telling us what to do. It ain't pinching in a dollar.
Many families don't recognize that there are really two ways families can leverage the life insurance industry to build wealth, right? And we know them as, number one, a fixed indexed annuity for proper retirement planning to make sure that you never outlive your money. And number two, an index universal life insurance policy. And what I love about these vehicles, well, number one, you have a really great personal story about your grandmother passing away.
Yeah, my grandmother, we like to call it, man, she sends me checks from heaven. And those checks come, you know, I remember the first time I got it, it was so unexpected. You know, obviously I was dealing with the loss of my grandmother, and I was, after the funeral and everything was done, we was at the house. My aunt walked up to me, handed me an envelope and said, "This is from your grandmother." And it had a note inside. And the note, you know, was just saying, even though that I'm gone, you know, I'm gonna be with you for the rest of your life. And this is a small token, and I'll be with you next time. And then when we got married, right, the envelope came in the mail, and it was from Marie Hansel, right? And it was very emotional to see my grandmother had the foresight to say, hey, when I'm gone, I'm going to leave a legacy behind. And that is exactly what our intention and what we do. And the mission of life insurance is to be able to, you know, have that loved one still be with you in all of those pivotal moments in your life.
Yeah, I think it was so significant for me because you and I had really just started dating when your grandmother became ill. She moved back to New Orleans, as you say, prematurely, and developed cancer.
Yeah.
And so I never had an opportunity to meet her. But what comes to mind for me is just generations of love. Because, I mean, let's keep it real. We were broke.
Yeah.
And on
Yeah.
paper, it looked as if we had it all together.
It sure did.
You know,
you
we
had
have-
a master's degree. I got an engineering degree. You know, we're making clothes. I'm making six figures. You're close to six figures, and everyone's telling us to buy this home. And it's like, yeah, y'all all telling us what to do. It ain't pinching in a dollar.
I mean, I remember those times where we were still living paycheck to paycheck. And collectively, we're over $250,000. We're living in the suburbs of Chicago. And I cannot express to you what that felt like when we got that first check from your grandmother. And if you can remember, we almost didn't get our home. The check from your grandmother came at the perfect time. I remember we like barely scraped up our funds to come up with our down payment for our home. And then we get into this home. We're like, so how do we furnish it? We can't afford furniture.
Right.
And that's when the check from your grandmother came, and it accompanied a long letter from your grandma. And the reason I love this memory is because while your grandmother did not have a large life insurance policy, she was able to pass down wealth in her own way, right? Based on the information and education that she had at that time, which was a lot of older families believed in savings bonds.
You know, those savings bonds, those EE bonds doesn't even exist anymore. You can't even purchase those. So yes, my grandmother didn't have the life insurance, but she did have the savings bonds. And I remember walking into the bank, and I went to cash a couple of savings bonds one time, and the bank teller was like, "We can't cash this." I said, "Miss, go get your manager. It's okay. We can cash these." She was probably like 20 years old, had never seen the savings bonds before. He was like, "I've never seen, I understand. Just go grab your manager." And then, you know, that interest that was accumulated because the savings bonds, much like an index universal life policy, the interest is growing without any losses, right? Now, one big difference though is that that interest does come with some taxes in a savings bond, which is not a lot, right? But in an index universal life, there are no taxes at all.
Yep.
Right?
It's a beautiful thing because many of us we still want to be liquid. We want to put our money in a vehicle that never loses, right? But has the potential for growth based on the performance of the market. And that's what an index universal life policy is. So I like to tell my clients, it's so much better than savings bonds because they don't exist anymore.
Right.
It's like a savings bond on steroids, okay? Like with the superhero cape on it. But the three main benefits of an index universal life policy is, number one, a permanent death benefit. You get to lock in the lowest monthly premium based on your age and health today. Number two, living benefits, right? If, God forbid, you experience, as your grandmother did,
right,
cancer. But millions of Americans daily experience heart attacks, strokes, and several other unexpected medical conditions. But what if they knew that they could withdraw monthly income from their life insurance policy? Because after all, it's called life insurance, not death insurance, right?
Absolutely.
And then the third component is cash value.
Right. And with that cash value, I'm just thinking about what we did for our kids, starting them IULs, as soon as we found out. It's like, because the cost of insurance is the lowest to date, right? Because you're the youngest that you're going to be right now.
Yep.
And the misconception, the big myth is, should I buy life insurance right now? Is it too soon? The moment that you get a Social Security number, you should have a life insurance policy. Because no one knows the time nor the day that we are going to pass away, or even worse, have to live with a medical condition and can never get covered for life insurance. Like cancer, like even pneumonia has taken people out, bone marrow transplants, all different types of things. COVID, oh my goodness, the amount of people, Jasmine, that said, let me think about it during that time, got COVID, and then reached back out to us, and what did we have to tell them? So, I'm sorry, we can't help you right now.
Yep. You know what I am the most grateful for is our obedience, because just 12 months before COVID-19 pandemic hit, no one in a million years would have ever imagined that an invisible virus would come and take hundreds of thousands of American lives and people across the world.
Yeah.
And so what I'm grateful for is entering into the industry at the perfect time. And what wealthy families understand is that there is such a thing as the perfect storm. Understanding the marketplace, taking advantage of the right opportunities and the right products before you need them.
Right.
And that's what we do at the Wealth Academy. We're on the preventative side for underserved, often overlooked families, which is you and I, by the way.
Yeah, I got another quick story about what the wealthy do. I remember one of our agents one time telling us that she was we know she was in real estate, right? And she was showing this client around downtown Chicago looking to buy, upscale condo, right, in the high rise. And had her son with her, and they were shopping around, looked around, and they finally found a spot. And she looked to the son and said, "This is the one you want?" And our agent was like, looking at the son like, "Is he making the decision today?" And yes, he was, and said, "Okay, all right." He said, "Yes, this is the one I want." And so afterwards, everything was done, and he wasn't talking to the son. The agent pulled the client to the side and said, "I'm just curious, where is the money coming from to purchase this home for your son? Because you're buying cash." She said, "Oh, out of the life insurance policy." She said, "Well, when did you start it?" "When he was born." We all do it. Soon as a child is born, we all get them a permanent life insurance policy that grows cash value.
And so let's talk about the larger issue. When it comes to higher quality financial products, tools, and information, it's not marketed to men and women who look like you and I. So let's think about it. In our communities, we are inundated with big box corporations. Mm-hmm. You got your State Farm, your Allstate, your Progressive, And if you live in a really nice neighborhood, maybe nationwide, right? Those are really the options of where we go today because insurance agents are underrepresented.
Right.
And so we have the big box companies in our communities, and then on the other side, we get coverage and we get information through our employer.
Well, the issue with that is that Congress allows those companies to advertise because they're property and casualty companies too. But when you're talking about growing money that's tax-free, the government doesn't want you talking about that. You have to know somebody.
Yeah.
Right?
Yeah. So there's a reason,
There's a
basically,
reason.
why we don't know this
That's
information. And so when you think about sitting down with your human resource director on the very first day that you get that job and you're signing on your benefits package, you don't know the right questions to ask. Right? They're not even presenting an annuity as an option. And so when we talk about the other problem that you and I solve, which are fixed indexed annuities. So let's kind of break down exactly what a fixed indexed annuity is. But I want to first talk about the history of the American retirement structure.
The three-legged stool,
The
right?
three-legged stool, right? Like, so what is the three-legged stool?
The three-legged stool was your pension from your job,
Yes.
your Social Security, and as well as your 401k.
And well, here's the thing. So the three-legged stool was actually your pension from your employer, Social Security, and your personal savings. And so what happened over time is Americans had the audacity to start living longer. And the longer we live, the more money we would cost employers after we retire, thanks to advances in technology, access to better health care, etc. And so the employers came together, they really lobbied the federal government, and they had this brilliant idea that let's get rid of pension plans because the mortality rate for Americans are improving, costing us more money. So instead of us paying for our employees' retirement for the rest of their life, we're going to replace it with IRS tax code 401k. Now, when 401ks slowly started to replace pensions, they were supposed to become the fourth leg on the stool. Well, what happened? Employers found out, oh, this is great. Employees can fund their own retirement. And they would even sell it to us through a dollar-for-dollar match program. And so I contribute $400 a month. You match me dollar for dollar. But why are you matching me dollar for dollar?
You know, it's funny that you say that. You know, do you really think a employer is going to give you anything for free? Or we're just going to match you dollar for dollar? What do you think is in it for the employer? They're getting a benefit for this, right? They're getting a tax write-off. But even a bigger problem with this is when you sit down with the HR person, in order to sell a product that's in the market like a 401k, you have to have a securities license. Does that HR person have a securities license? No. You sign up for health insurance. Does that person have a health license? No. You sign up for life insurance. Does that person have a life license?
No.
So we're giving the three biggest things that we need in our life to a person who's not even qualified.
But you know what? What do we do when we don't have any options? Because
We
that
just
was
do
you
it.
and I. We just do
Just
it.
do it.
Because we grow up in these communities and environments where we are told obedience is better than sacrifice. And let's remember when you and I were both climbing the corporate ladder. We're literally working, helping build the company's mission and vision, and we're leaving home early. We're not making it home until late. Babe, people don't have time
They
to
don't.
research proper financial tools.
They don't.
And not only do you have to research, then you kind of have to filter through who's being honest, who's only presenting options because
Right.
they can only represent one client, one carrier, one product. And so when you think about fixed indexed annuities, it completely brings back life, or should I say stability, to that three-legged stool.
It
Because
does.
let's take a look at the stool again. We have pension plans, right? So we used to have over 85,000 pension plans in the United States. Today, that number dwindled down. Less than 30,000 pension plans in existence today.
Oh, it's even less than that. It's 16,000.
16,000 pension plans today. When you think about Social Security, well, Social Security is expected to be completely exhausted by 2037. So that's looking real insecure. So now we have social insecurity. And then let's talk about the personal savings. So let's explain. So now the average American has less than $1,000 in their personal savings. In fact, 36% of employees today in this country have less than $1,000 in their savings.
That's right.
We don't have a savings problem. We have an income problem.
That's right.
The average American, and that was you and I remember we were making decent money, $250,000, but we still didn't have enough money to even save up to buy our home.
That's true.
So when you think about what fixed indexed annuities are, that they bring back the stability to that three-legged stool, they give you principal protection. So whatever dollar amount you currently have sitting in a 401k, an IRA, a TSP, a 403b, you can actually roll that money over into a fixed index annuity where it guarantees you principal protection. So regardless if the market is up, down, or sideways, your money is safe.
You know, I wish I had known that when I was 30 years old and I left my first job and the company told me, hey, Ellis, you got 30 days to move this money. And I didn't know what to do with it. You know, I wind up, reaching out to a financial advisor, but they told me if you don't have at least $250,000, I can't talk to you. I went to the bank, they told me the exact same thing. Too much for a Roth IRA, you can only put $5,500 a year. So what does a young kid do that's trying to be responsible? You wind up taking a check. And what happens, right? You're not 59 and a half, so you get a 10% penalty. And then you also got to pay Uncle Sam his 20% tax because you took a distribution. And at the end of the year, this money is now added to your gross income and you got to pay taxes again.
And we ultimately ended up becoming our worst nightmare, which was short-term thinkers in a long-term economy.
But
That's
even
what
worse,
happens.
it's just that also, if I would have known an insurance agent, I could have got an annuity.
Short-term thinkers. So because we didn't know where to go to be properly educated, properly informed, and make the right decision for our family, we inevitably made a short-term decision.
Yeah.
Because I remember, you talk about that experience from the technical side of actually the amount of money. I remember you had $30,000 because you were an engineer and you were going from one company to another company. And I remember as your wife feeling really helpless at that time because you know that it's $30,000 and you want to make the right decision with this investment. But we had no clue where to put that money. We were like, do we buy another car and incur more debt? Do we pay, down credit cards? Do we get out of debt? What do we do with the money? And ultimately, what we ended up doing? We didn't have $30,000. We ended up with about $16,000 because we had to pay the penalty, taxes, and so many other decisions that we would not have made had we been introduced to index universal life policies, fixed indexed annuities. And so it's amazing how you can become a long-term thinker with access to the right information.
Yes. And that's the reason why we're doing this now, right? To make sure that people have the information that they need, because most people don't know what an annuity is. There's so many misleading articles online about what they do, and as well as cash value life insurance. You got to sit down with a professional to go through the differences, because it's not one size fits all, right? It's different.